Congratulations, Priya, on the appointment, and congratulations on the elevation, Ritesh, as well. Your first, your last, interaction that we are having. I have a two-part question for Priya, and the question is basically from a very near-term, immediate term, and the long term. So, in the very near term, if you could tell us secondary sales, how was October festive season? How has it panned versus your expectations? And because of the GST rate cuts that have happened, what are the incremental volumes that you're anticipating over and above what you were earlier as well? Because, before the cuts, you all were saying that the second half will be better than the first half. And in the long term, the medium to long term, what's the strategy to structurally uplift volume growth and revenue growth over what we've seen over the last 3 years?
Sure. Let me start with the structural shifts that we will make and our focus. We will be obsessed with volume-led revenue growth. This will be our focus, our obsession. There are 4 pillars we will focus on as a strategy in the future. The first is that we will segment radically our consumer segments in India. There are distinct consumer cohorts emerging in India: power spenders, premiumizers, and democratizers. And with our price portfolio, which spans across the pyramid, we have a unique opportunity to serve all these emerging segments in India. We will future fit our marketing and sales frontline machinery. Our marketing will become much more social first demand generation, and we will invest in ensuring that we are investing behind quick commerce and e-commerce. We will radically transform our core brands, making them more modern, youthful, contemporary. This will be our focus. This, along with investing disproportionately behind a few high growth segments to scale them and make markets in India, will be our priority and our focus. So really simply, volume-led revenue growth is what you should hope for in the future from us. Ritesh, you want to take the
short
first?
term here and now, let me just talk both the quarter gone by and then what we see going forward. If you look at the quarter gone by, September quarter, I'll put into 3 different portions. 40% of the business was benefited from GST rate change. There's of course a short-term transition impact which we spoke about, and hence categories like hair care, skin cleansing, they saw the impact coming in. Hair care has grown very strongly for us for last several quarters. It is competitive growth this quarter as well, but headline growth has got impacted. Same is the case for skin cleansing. So 40% business saw a short-term impact coming in. 20% business, which is, let me say, skincare, tea, there was no change in GST. We saw these businesses growing in high single digit, also supported by volume growth within this growth. Third, last 40% business is our home care business, where we saw a mid-single digit volume growth on the back of a strong high single digit volume growth in the base. Overall, this volume growth was muted, and we had a flat growth of USG because of the price declines. Today, commodity headline crude is almost 10% lower year on year. Plus the competitive actions we took, which we spoke about it earlier, put together had a negative impact of pricing on home care. So this is how the 2% growth for the quarter has come out. Then to answer your question on what do we see October onwards, clearly once things stabilize early November, there are multiple prices in the market, old MRP, new MRP. Of course, with all the amount of support that we have given, this will stabilize in the market. We do expect that typically for FMCG business, 2 things are important. The net overall disposable income which consumers have and the consumer sentiment. GST will end up supporting both of them. So we do believe that we will start seeing recovery of volumes going ahead.
Right. So do you have a quantifiable target when you say volume-led growth? Because a large part of your business obviously impacted by macros, but a small part of your business, which is growing fast, is immune to macros. If you could give us a quantifiable target that you have here.
Yeah, we will maintain the range guidance that we've always given you. I think what's important to understand is how we will manage pricing as we go along. Pricing, we will continue to be in line with the way commodities are diverging. When you look at our commodities, we have commodities like Ritesh mentioned, like crude, like tea, which are deflationary, and other commodities like SMP and palm oil, which are inflationary. So we will continue to be gradual in our pricing, really focusing on volume-led revenue growth.
Mid-single, high single, any sort of quantifiable targets?
We will stay in our range guidance.
What kind of synergies have you realized so far in Minimalist? How much more are you expecting here? And in terms of scale, what proportion of Minimalist products has already been integrated into your supply chain? And what's the revenue scale there?
So we are focused on 2 elements to start with. First, continue to build the innovation pipeline, leveraging our R&D, so that work is started. Second, here and now, more tangible realization is on supply chain synergies, procurement, logistics, production. That as we speak, we started deploying already as we speak.
Priya, what's your strategy on the foods business? Because beauty and well-being, obviously, the underlying macros are fairly strong. In the foods business, the agri part is volatile given the commodity conditions, but also, the acquisition that you all made of GSK Consumer hasn't grown as at the pace that, the street would have liked it to. So what's your strategy on growth in the foods business, and what's your target here?
Yeah, I think when you look at our foods business, I think we need to separate it into the segments, right? The first is in terms of tea, coffee, and beverages. We are leaders in beverages, in tea, and this will continue to be a focus and priority of volume-led growth. The tea is now deflationary, and therefore volume will be a key focus in this deflationary environment. When you look at foods, I mean, the market in foods, we are leaders in condiments with Kisan, growing our condiments business and expanding our play in condiments with Kisan will be a key focus for us. When you look at our Horlicks business and our HFD business, this indeed is an area where we have begun to see early green shoots of the work that we have done to correct our price pack architecture. What I am excited about is the opportunity that exists with wellness and nutrition growing in the country. There is a clear consumer trend on wellness and nutrition, and Horlicks is extremely well placed to advance based on this, and we will be focused on that going forward.
Once we finish the demerge of ice cream, you will see this number improving. And on an annual basis, we have 50 to 60 BPS benefit of margin coming in once ice cream gets demerged. September quarter, December quarter also non-season for ice cream, which means the impact is a little more than that. So subject to adjustment from ice cream, our margin levels will be maintained at the current levels.
So that's between 23 to 23.5%. Would that be?
So currently we are at 23%. Let me say 23.2 for this quarter. We do expect that number to be 50 to 60 BPS on an average annually better. Right. And within next 1 or 2 quarters, because the impact is much higher in non-season, it will be more like 80-90 BPS impact from ice cream. So more like 24-ish, I would say.
Okay, 23 to 24 is what the analysts would be fairly comfortable with. Now that you're going to Unilever Global, the important part is that there have been comments coming in from the global leadership as well, that the two markets that they'll be focusing on, India and the United States. So what kind of increased support can you expect from the globe on the back of that, and what could that mean in terms of incremental growth here in India?
So, India has always been critical for Unilever, honestly. HUL at the center of that. Given that we are now the fastest growing large economy in the world, not surprisingly, Unilever calls out India as a key focus. We will continue to benefit from the R&D capabilities, bring in the right brand portfolio as relevant, and the category strategies, understanding category trends around the world. This is the area of focus, and it augurs well for HUL that we will double down behind India.
So, do you have any in the marketplace, any estimates of how secondary growth in the month of October has been? Primary sales obviously disrupted because of the GST transition. How has secondary growth been?
Yeah. See, for our industry and especially for Hindustan Unilever, we have trade inventory between our own place, our distributors in the market, but they're always not very high level of inventory. They're typically 4 to 6 weeks, depending which category we're talking about. So there is not much of disconnect between primary growth and secondary growth. Now, we do expect, as I mentioned, November onwards, as the first early November, as things will stabilize, we should start seeing overall the stability to bring growth back, which is what got impacted for last couple of months between September and October.
Priya, volume growth in the FMCG industry over the last decade has lagged GDP growth. So what is it that you believe HUL can do going forward for it to at least get to GDP growth, if not above GDP growth over the next few years?
Yeah, I think Ritesh mentioned, and I think it's important to first look at the macroeconomic variables of India and how, what's happening. First is the GST reform itself, and the GST reform is most welcome, which the government has done, because that augurs well for consumer sentiment improvement, overall demand improvement, and we expect this to gradually improve. We've had a good monsoon, maybe an excessive monsoon, and we need to monitor this closely, but monsoon is good. This, along with overall rural wages, are showing improvement, and therefore there is conditions that macroeconomically seem that market growths will improve. I think what HUL has always been good at is creating markets. Now, when you look at the per capita consumption of CPG in the country, in a growing economy like India, the per capita consumption of CPG is under $54 per capita. And there is a huge headroom to grow in a growing country like India. And that is HUL's focus. So to drive market segments of the future, we will invest disproportionately behind these, radically transforming our core brands to make them more modern, more premium, more youthful. because it is the Gen Z consumers of India who are changing India, and more digital, more online, and more social first. So this will be our focus as HUL.
So what 3 categories would you call out for the future if you had to?
All 4 of our segments are critical for us, given the composition of our business of HUL. 40% of our business is home care, so that is a critical category for us. Beauty and well-being is fast evolving, as is foods in the country, and therefore again a critical focus for us. And we are the leaders of personal care. So I will keep coming back to the fact that all 4 categories matter, but it's the shape of the categories that is changing. I think what is special about HUL is how we straddle the price portfolio and the brand price pyramid. And therefore our growth will be across the segments, not just in urban top end, but also in the middle of the country and in rural. And this straddling of the pyramid, when the country grows, HUL grows.